The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Risk-off sentiment in U.S. markets as all eyes are on that tepid economic data and the latest developments coming out of the Israel-Iran conflict. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Boston.
And I'm Alex Steele, kicking you off to the closing bell right here in the United States. Taking a look at the S&P, just down 0.7%, but right around the lows of the session. You look at this board, there remain classic risk-off. Move into the bond market, move into the dollar, and move into gold, as well as NYMEX crude up now almost 5%, sitting at $75 a barrel.
And that risk-off tone really started this morning with a trifecta of economic data points that took stocks down a peg at the open. Point one, a plunge in monthly retail sales that included a surprising slide in spending at restaurants. Point two, industrial production of consumer goods. That declined for a third month. And point three, U.S. home builder confidence falling to the lowest since 2022. All this coming just as the Fed went behind closed doors to start that two-day policy meeting.
The Fed does have reason to wonder whether inflation expectations, wage bargaining, price-setting behaviors are quite as well locked down now after several years of elevated inflation as they were previously.
On top of that, the Fed now has to at least pencil in some scenarios for the Middle East conflict and the feed through to global economic activity. President Trump meeting right now with advisors to weigh whether the U.S. should take a direct role in the strikes against Iran. The headlines of that meeting alone knocking a few extra points off equity indices and adding a few more points to the dollar rally. So no surprise that the latest Bank of America data show clients taking a guarded stance on U.S. stocks for the first time in 6 weeks. Net buying of defensive sectors, net selling of cyclicals. The most crowded trade remains long gold. And that survey, we should note, only covers the week through June 12th. Of course, it was late June 12th that Israel began firing on Iran.
So let's take a look at the correlation between oil prices as well as potentially inflation expectations. So here you see the white line is the 10-year break even and the yellow line is WTI crude. They don't move perfectly, but they do move relatively together. And you take a look at where we were back in 2022, and you did see that spike above 100 to oil. You did see a spike in 10-year break evens. Both have been relatively tame, but if you just check in on the right side of that corner there, you can see oil starting to move a lot higher. That white line, though, the 10-year break even, not inching yet, but does it? Does it wind up moving higher? Does it influence consumers and how they spend? Does it wind up eventually impacting the Fed?
We see those oil prices higher, stocks near session lows on the day, the VIX getting a spike and a bid into the dollar. Here is what we know. Israel has intensified its campaign of strikes against Iran's nuclear facilities. Iran has threatened Israel in return, and the president of the United States now meeting with his national security team to discuss what role, if any, the U.S. will play. Joining us right now is retired U.S. General Wesley Clark, former NATO Supreme Allied Commander for Europe. General Clark, we talk about this idea of U.S. involvement, at least up until what until this point has been a regional skirmish. I am curious as to what the contours of U.S. involvement would even look like.
They probably would look like assistance in identifying all of the nuclear sites, assistance in bringing ordnance against those sites, including the big bunker buster, and then going in on the ground with special operating forces to sanitize those sites. Somebody has to go there, clean up the mess, get the documents, make sure there's not another program hidden somewhere, identify the participants, etc. But the big problem then is, what's the end state? Do you leave a wounded, embittered, angry Ayatollah in charge who says, I'm going to get even, and unleashes another terrorist set of strikes in the world? I think you're going to end up with a regime change out of this. And the question is, who's going to take charge and how is it going to work? We sure didn't do a very good job in Iraq in 2003.
Yeah.
We went into Libya. Didn't do a good job there. So I hope the administration is going to follow the pattern that we used in Kosovo in 1999. We described the end state first before the first bomb fell. We knew where we were going with the campaign. This is what should be going on in the Situation Room right now.
I am curious, General Clark, about the idea of allies if the U.S. were to come to the aid of Israel in a more direct capacity than what we now know publicly, is it possible we will also see other allies of Israel, allies of the U.S. also be involved?
I don't think at the first stage they would need to be involved other than in defensive measures for their own homelands in the region. Maybe in a humanitarian sense later, maybe helping a new government stand itself up in Iran. But remember, all of the authority in Iran right now is compromised. It's all part of the Ayatollah's network. The failure in Iraq was when we went into Iraq, we said, everybody associated with Saddam Hussein, you're all criminals, get out of here. And we created our own insurgency. Can't do this in Iran. We may take the top of the regime and change it, but at least temporarily, these people who are policemen and police chiefs in cities and villages and so forth, they're going to stay where they are.
Yeah.
The mayors are going to stay where they are. And we'll have to figure out how to deal with that.
General, when you talk about the end state and how important that is and what that looked like in Kosovo, how do you distinguish between end state and mission creep?
Well, you have to accept the fact of the mission is not just bombing. If there's 80 million people there, you can bomb and all you want, but someone has to provide food, fuel, electricity, education, health care. 80 million people. You can't just turn it into a wasteland. This is a civilized country. You look at the traffic going out of Tehran right now. You'd have mass starvation. How can you accept that? Don't call it mission creep. Understand, when you go in, this is your obligation.
So how do you define that versus boots on the ground, kind of going door to door? How, if you're in the Situation Room, how would you be proposing it right now?
What I'd be saying is, Mr. President, you got to look at the end state. We're going to get regime change. Let's figure out who's going to lead the new regime. Is it going to be the Shah's people? Is it going to be the Mujahideen-e-Khalq that many of us know, the MEC so-called? They claim they have a democratic program. Will they go in there and do this? And if so, are we getting them ready? Is anybody going to get them there? And what's their method of communication? So there's got to be a whole effort put in place to look at the top of this. And then you've got to sort of work out the timeline of what's going to happen from the first moment that you put the first boot on the ground. You can't wing it the way we tried to do in Iraq. And you see, this is the problem. In the Situation Room right now, probably they're going to be talking about how many aircraft, how do they get refueled, what if a pilot gets shot down? All that stuff is lesser included problems. The major problem is afterwards. You're going to have radioactive material.
Well,
what are you going to do?
Well, General Clark, that's what I'm curious about, too. I mean, because some of the other examples you gave, and we talk about Iraq, Kosovo, and a few others, Libya. I know Libya had nuclear capabilities, but, I mean, we were talking about regimes that were much different. We were also talking about nuclear programs that weren't nearly as advanced, at least of what we know about Iran. Is there an effort to ensure, no matter what happens, that those nuclear materials, whether it's the enriched uranium or the spent uranium or anything else in between, is secured by a trustworthy partner, if not directly by the U.S. or Israel themselves?
I don't think there is a trustworthy partner other than the United States that has the capacity to do this. I don't think even Israel has the capacity on the scale that's needed. You're going to need major special operations forces. They're going to have to be transported into the region, have the right equipment and training, and have the right security. They may be in a site like Natanz for a month or more. They're going to have to pull out the centrifuges and decontaminate, look at water supply. They're going to have to coexist with the local population in the region. So these are major issues. And yes, you can get some assistance from the United Nations, but you can't just say, okay, we did the bombing, UN, you go take over. They do not have the leadership. They do not have the capacity to do it. The International Atomic Energy Agency might be able to help, but they can't lead it.
All right, General Clark, we appreciate you taking time for us. Of course, we're still awaiting developments as to what exactly is taking place between the president and his national security advisors. General Wesley Clark, their former NATO Supreme Allied Commander, was the man who helped to lead the Operation Allied Force in the Kosovo War. A lot more coverage coming up on this right here on The Close on Bloomberg.
right, taking a look at the markets here. It's definitely risk off. The S&P is off by 0.7%, moving into gold, oil, the dollar, as well as bonds. Tracie McMillion is head of a global asset allocation strategy with Wells Fargo Investment Institute, and she joins us now. Tracie, how much risk do you need to be taking off right now, and where do you go for safe haven?
Sure. So thank you for having me this afternoon, Alex. It's a very uncertain time, and we do think that uncertainty is going to probably prevail this summer. So we are telling our investors to be sure they're diversified, be sure that they are preparing their portfolios for policy and for geopolitical uncertainty. And what that means is that we think that geopolitical uncertainty will continue. So aerospace and defense are good places to be. Commodities, especially precious metals, are good hedges against geopolitical risk. And we think that the tariffs are likely to persist. So policy risk is another thing that investors need to be concerned about as we move through the summer.
What do you avoid?
Yeah, so we think that what investors should be avoiding are those high beta areas, the low quality areas of the markets. So think emerging markets equities and small cap equities in particular. Those are two areas where we see low quality earnings, where we see the potential for greater tariff hits. And sector-wise, we'd be avoiding things like consumer discretionary, where we think, again, the tariff hits are going to be more significant.
I am curious, Tracie, when we talk about some of the uncertainty going on, obviously now the big focus on geopolitics, but of course, just a couple of weeks ago, all the discussion was the uncertainty created because of the trade war, the tariffs, and how that sort of feeds into the economy. Are we talking, in your view, or at least in the view of the Wells Fargo Investment Institute, about a potential case for a recession?
Yeah, so certainly tariff policy is something that we've been watching very closely with regard to how it's going to impact economic growth. And we do think that there will be a hit to economic growth in the third quarter and the fourth quarter as tariffs are fully implemented during that time period. But we don't necessarily think that it's going to be severe enough to push us into a recession. Instead, we think it's probably going to be a slowdown, and that growth for the U.S. is probably going to be about 1% this year.
One thing I've been really intrigued by, Tracie, is just how much people are still sitting on the sidelines. Obviously, we know the institutions, of course, have taken a little bit of a backseat to the recent rally, even on the retail side. A lot of money still in short-term debt instruments, cash-like instruments, if you will. Is that basically going to play out for the rest of this year? Or do you see any sort of upside catalyst where that money would be put into more riskier investments?
Mm-hmm. Sure. So we're telling our investors that if they have cash on the sidelines, that the volatility that we expect this summer as we move through adopting the reconciliation bill, the tariff expiration, and also the X date for the debt ceiling, all of those are likely to be contentious, not likely to go smoothly. So we could see pullbacks. And so we would take some of that cash and move it into areas of the market that are high quality, like large caps and mid caps in the U.S. equity markets. However, if investors are very risk averse, and that's why they're holding on to that cash, then we would say that as the Fed brings rates lower, which we do expect them to do a couple of cuts between now and the end of next year, as they bring rates lower, that's going to bring cash rates lower. It's going to bring short-term fixed income rates lower to move out to intermediate term.
But that's where we get back to sort of the geopolitical issue. And I realize that the Fed's going to say we don't look at oil, don't worry about it. But when you have a spike in oil, and I had a correlation chart between that and 10-year break-evens, it's not a one-for-one, but it's not a nothing. If oil gets persistently higher, if we have a geopolitical risk premium in it, does that change inflation expectations?
It very well could. What's been driving a lot of this downside surprises that we've seen in the inflation numbers over the last couple of months has been lower oil prices. So now as oil prices move into the 70s, and I think it's important also to know that oil prices were here in early April. So we have seen prices at this level just a couple of months ago. So if we were to move significantly higher, though, then that could contribute to additional inflation above and beyond what we expect from tariffs.
And before we let you go, bringing it back again to the top of the show, Romaine mentioned it, the Bank of America Fund Manager survey said that investors are the most underweight the greenback in 20 years. Is long dollar a trade you want to be taking on right now?
So we do anticipate that the dollar will move moderately higher as we go through the remainder of the year. As commodities prices rise, that could increase the demand for the dollar. As we do make some trade deals, we think that could get trade flowing again, and that also could increase demand for the dollar. So we do see some upside potential there.
All right, Tracie McMillion, head of global asset allocation strategy with the Wells Fargo Investment Institute, as we keep an eye on equity markets with the S&P down about 0.8%, near the lows of the day, the VIX above 21 here, and seeing a lot of activity right now in the FX space. When we come back, we're going to talk a little bit more about the solar sector. We're seeing a big drop in shares of those names today. That's because of a key provision in the Senate bill that apparently is not a provision anymore. That's coming up next here on The Close. This is Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations. And we start off today with Western Digital. Morgan Stanley raising its price target to a street high $78 a share and maintaining an overweight rating. The analyst has growing confidence in the company's technology competitiveness and says the company is a key name where we be putting incremental capital to work. Those shares up for a second straight day. Next up, let's take a look at Spotify. Pivotal Research raising its price target from $800 to a street high $900 a share. The analyst says Spotify has, quote, won the global audio streaming wars, and AI will help the company increase user engagement growth and monetization. Those shares up a third day to a record high. And finally, Sunrun. KeyBank downgrading to underweight as solar stocks across the board plunge. This after Senate Republicans released a bill that would end tax credits for clean energy sooner than expected. Shares of Sunrun down 41%, the biggest one-day drop on record. Those are some of our top calls, but we do want to stay in the solar sector and get some insights into what's really going on there. Maheep Mandloi is senior analyst over at Mizuho who covers these stocks. And Maheep, I am curious about this provision that apparently has been dropped from the Senate version of the bill and just how critical that provision, those tax credits, were to the growth of this industry. Do you have any way to quantify that?
The tax credits are roughly around 30 to 40% subsidies, the investment tax credits for solar battery projects. So that's a rough way to kind of size the amount of capital contribution which was coming from these tax credits. But the point is that these tax credits in the Senate bill are actually better than the House bill. These are definitely much lower than what's in the Inflation Reduction Act or what President Biden had put in. But I think still slightly better than what we got 3 weeks ago here.
This gets to this idea here of what the uptake for solar energy would be without those incentives for consumers, for homeowners, for home builders, for that matter, to actually take advantage of that. Is there still demand out there for these panels?
Absolutely. As in, there's two different industries to look at. One's residential and one's the utility scale. At the residential scale, there's still a lot of states where the cost of electricity is still high or increasing every year because of inflation or because of all the power going to data centers. So that's creating the pricing advantage, and the equipment costs are falling every year. So there's still a market for residential solar. Sure, it'll be slightly smaller. Not all states might be in the money, but there might be a pathway to still keep some of these, say, leases or PPAs in the future for residential solar. One interesting thing in the bill was that they have retained the tax credits for battery storage for a very long duration, so mid-2030. And that is something which homeowners could take advantage of.
Okay, so all is not lost. However, look at Enphase. That stock getting just crushed today. It's the worst performing stock on the S&P. How do these companies that have most exposure to residential solar, how do they stay in business?
They have to innovate. They have to bring down the cost. And one of the reasons why we outperform Enphase is they have a next generation technology called IQ9, which will have almost 30-40% lower costs than what they have today. So you reduce your cost and streamline the business. And I think the industry can definitely survive over here once these tax credits go away.
Why do you think that the tax credits for utilities through power purchase agreements was kept, but not for residential?
No, those are also getting cut down, but they do have something called a start of construction language, where you start construction today or next year, and you get the tax credits for the next 4 or 5 years. And I think something to do with also the time it takes to build large utility scale projects, right? The sort of variables involved when connecting to the grid versus home solar, which is generally connected within 1 or 2 quarters. So maybe that might have been a reason to probably cancel the home solar credits for senators. Yeah.
All right, Maheep, thank you very much. Maheep Mandloi, senior analyst over at Mizuho. Those solar stocks, though, Enphase, for example, one of the worst performing stocks on the S&P. It does beg the question, though, if we're looking for above all energy approach when it comes to, say, powering the grid, powering our homes, powering data centers, removing some of that support for wind and solar makes my head scratch.
Yeah, it does. And I mean, I guess we kind of knew this coming into this. I mean, the president had made clear on the campaign trail that these types of programs probably were not going to be a favorite of his. And now we're seeing that sort of reflected in what Congress is doing. We should point out this still has to go back to the House at some point. There has to be some reconciliation of all this. So it's possible that some of these could still be preserved. But
a rough world for wind, solar, and hydrogen, despite all the heavy lobbying that was being done in Washington, D.C. All right, taking a look at these markets, Romaine, where are we at here? We're looking at the S&P down 0.7%. Volume's light, though. We're around the lows of the session, but the risk is so extreme. I'm actually curious as to the actual lack of reaction in the market.
Yeah, and we should point out there's still a lot we don't know. We do know that the president did meet with his national security team. There have been some drips and drabs of headlines, but really no definitive messaging coming out of the White House just yet as to what the U.S. involvement would be. And of course, we're still waiting to hear from what Israel and Iran might do next on their own, even with or without the U.S. involved.
Nonetheless, you're looking at a VIX now sitting at 21 as equities sell off. This is Bloomberg The Close.
3:30 p.m. here in New York. This is the countdown to the close. I'm Romaine Bostick.
And I'm Alex Steele. Equity is right around the lows of the session. The VIX jumps. It's classic risk off right now. You move into the dollar as well as move into treasuries.
And also seeing a big bump higher in oil prices here. I think the highs of the day right around $75 a barrel here. It's kind of interesting. I was looking at the highs of the year. I kind of forgot we were up around $80 at the start of the year here. So not quite to year-to-date highs, but certainly a long trip from where we were at $55 a barrel just about 2 months ago.
Yep. And you know what oil producers like less than $40 oil? Volatility. That doesn't provide any kind of clarity. President Donald Trump meeting with his national security team to discuss the escalating Middle East conflict that has fueled speculation that the U.S. may join Israel's attack on Iran. And well, joining us now to discuss is General Mark Kimmitt. He joins us now for more. General, good to get your perspective. What's going on in the room right now? You've sat in those situations before. What's it like?
Yeah, I think what's happening is they're going around the table. The Secretary of Defense is having his say. The Secretary of State / National Security Advisor is having his say. The intelligence people will be providing a lot of information on the current situation and what they anticipate what's going to happen in the future. The whole idea of a National Security Council meeting is that all the voices are heard. The president listens to what they have to say and then makes a decision.
In terms of what that decision actually looks like, we spoke to General Clark earlier in the program, and he was saying you need to focus on the end stage. And that's different than what happened, say, for Iraq and with Libya. Do you agree that that's kind of what the focus should be? And is it the focus?
Well, it should be the focus. I used to work for General Clark. I know how he thinks. I think very much the same way. We think in terms of 3 issues: ends, ways, and means. What are the ends that you're trying to achieve? What are the ways that you're going to do it? And what are the means that you're going to use? In this case, I think that what General Clark was saying is we're too focused on the means, such as dropping bombs and the ways, the attack into Iran, and not about, okay, what happens on the day after. And I think that's a critical issue, and hopefully they're thinking through it.
Well, that gets to the question then, what is the end, or what do you think should be the end, General? Is this simply about finding a way to neutralize Iran's nuclear program, or is this about wholesale regime change, or are those two things not mutually exclusive?
Well, I think they are mutually exclusive, as we've seen in our own history. Up to this point, the policy of President Trump, and candidly every president before him since Iran has had a nuclear program, is that Iran will not have a weaponized nuclear program that can be used against Israel, American allies, or in worst case against America itself. That has been the policy up until about the last few days. And this question about regime change, I think, needs to be thought through clearly and carefully. It sounds good. It's this notion of pulling up the plant by the roots. But as we know from our own experience over the last 20 years, what does the day after look like?
I am curious, too, General, about this idea of going to war with a country that we know has nuclear capabilities. General Clark, of course, gave the example of Libya, but their program was not nearly as advanced as Iran. And I'm curious as to what precautions, and I know this gets into the ways a little bit that I know you want to avoid, but I'm curious about what precautions can be taken when going in there to make sure that there isn't a nuclear incident, if you will.
Well, first of all, one of the great things about bombs is that they not only destroy infrastructure, but they can actually neutralize some of the radioactive material. But I believe that you're correct. One of the great issues is, say, for example, a bomb hit the storage facility for the enhanced uranium. They apparently have over 500 pounds of enhanced uranium. That could, in fact, cause a radioactive incident in the near area, as we've seen in so many other nuclear incidents around Fukushima, Chernobyl, so on and so forth. So I think that has to be considered. That has to be careful. I think that that's probably some of the dialogue that's going on behind the scenes between the United States and its allies, and candidly, possibly Iran as well, setting the limits so that we don't have a nuclear incident as we're trying to get rid of their nuclear program.
Which also brings me to the role of other countries in the Middle East, like the Saudis, UAE, Qatar. What do you suspect that their relationship is right now and what they're trying to accomplish, knowing the backdrop you just spelled out?
Well, first of all, naturally, they don't want to see Iran have a nuclear weapon. There is longstanding hostility between the regimes. And one of our greatest concerns, it has been over the years, is that if Iran is able to achieve nuclear breakout, that those other countries defensively will want nuclear weapons as well, Saudi, UAE, and then we have a non-proliferation challenge with this world needs less nuclear-armed countries rather than more. And if Iran, Saudi Arabia, the UAE, Turkey have nuclear weapons, that's a level of instability that I don't think we want to undertake.
Yet an Iran that's sort of bombed out and not taken care of after the fact is probably something that the Saudis don't want either, and that's going to be a hub then for instability. So what role can they play in that? Very little. The fact is, I would not see a significant spillover of terrorist activity coming out of Iran. In fact, they may be well armed. They may use their proxy operations around the region, but you haven't seen a lot of Sunni-type al-Qaeda, ISIS, Ansar al-Islam terrorist organizations that come from the Shia branch of Islam directed by Iran. Hezbollah is probably the only large-scale example that I can think of, the Houthis less so. But when it comes to terrorism, that is not something we normally associate with Iran. Overseas proxy operations, for the axis of resistance against Israel, yes, but they're not going to be
dropping IEDs and blowing up themselves in terrorist incidents.
As this conflict progresses, assuming it does progress, there's been a lot of questions as to whether this is a fight that can be done through the air as it's being done right now, at least based on what we've heard from Israel and what we speculate we're going to hear from the United States. Is there a stage in this process where we are going to have some meaningful presence on the ground?
I don't think so. In my mind, this is an air campaign, will stay an air campaign. I think the last thing that anybody in the Western world would want to see is NATO, EU forces, U.S. forces, and for that matter, Gulf Cooperation Council forces trying to control and occupy the country of Iran. I think that hasn't even been considered and won't be.
Well, I mean, we kind of said the same thing, though, about Iraq and Afghanistan. We said the same thing about Vietnam. We said the same thing about a lot of conflicts that we got into that we thought we can just go in with our aerial power and that we wouldn't need to actually put our men and women on the ground. Why would this time be different?
Well, you and I can have a debate about that at another time, but I don't think that we ever, in those instances that you've discussed, ruled out the use of ground forces from the beginning, and I think we have done that here.
All right, General. Well, we appreciate you taking time for us. That's retired General Mark Kimmitt there as we continue to watch the developments coming out of Iran and Israel, and of course waiting to hear from the White House with the President of the United States meeting with his national security advisors about the next steps. Stick with us. We're going to continue covering the markets as we count you down to the close. This is Bloomberg. All right, time now for our stock of the hour. A two-day rally in Coinbase coming to a halt. The shares down 4% ahead of a key SEC decision on whether the crypto exchange can offer blockchain-based trading for equities. This all coming at the same time as the Senate is set to vote on separate legislation involving stablecoins. Bloomberg Intelligence's James Seyffart joins us right now to talk a little bit more about this. All right, let's start off with the SEC side of this here. We're talking about, of course, a market really focused in right now, James, on new regulations, or I guess changes to regulations and potentially new legislations that would change the law. What do we know?
Yeah, I mean, the one thing that everyone's watching for right now is what's going on with the stablecoin bill. But like the big news on trading of equities on the blockchain, which is what Coinbase wants to do. They want to tokenize equity securities and trade them. That is something that they've been talking about wanting to do since at least 2018. So that's the big news that's come out in the past couple of hours. How will the SEC handle that application? It remains to be seen. They could issue a no action letter. They could come up with some rules around this. Who knows? Kraken is already doing this sort of thing outside of the U.S. But really, this just comes back to the overarching trend of something I'm watching, which is like TradFi and DeFi. These different companies are building bridges. You're taking DeFi assets and putting them on the TradFi rails. That's like, the Bitcoin ETFs and the Ethereum ETFs. They're taking those DeFi assets and letting them trade in the TradFi rails. This is the exact opposite. Stablecoins are the exact opposite. Mm-hmm. They're taking, TradFi assets and putting them in the DeFi rails. So that's the trend that we're going to see continue to happen.
James, let's pretend like I understood what you were saying. Does that just mean that we're trying to put more stuff out there when it comes to tokens and coins?
Yeah, I mean, it's the tokenization of everything, I guess, is really what it comes down to. I mean, there's a news story that just came out within the last couple hours that JPMorgan is doing a trial with Base, which is a layer 2 of Ethereum, part of Coinbase, and they're going to trade tokenized deposits and test using that. I mean, it's basically going to use technology to do more efficient trading. The trading of these tokenized assets would be 24/7 instant settlement, which is, there are good parts and bad parts to that if you talk to different people. So It's just basically taking out the plumbing of the back end in some parts of this and putting in some end users might not even notice the difference.
I am curious, who is the main beneficiary of this? And I'm talking about the companies involved. Is there one?
I mean, the ones I'm like in this particular area, it seems to be like the worlds are colliding, right? Coinbase is a crypto trading firm. They want to trade equities. Robinhood is mainly a typical broker dealer. They're trading crypto now. Schwab is saying they're going to open for spot trading. It's basically the collision of these two areas that everyone's trying to benefit from it. Essentially, they're trying to both go to the areas where things are growing.
All right, great stuff, James. Really appreciate it. I still don't know why I need this in my life, but that's probably why I'm not cool like you. All right, James Seyffart joining us from Bloomberg Intelligence. Thank you very much. We are, of course, waiting for more details about President Trump and his meeting in the Situation Room. CNN reporter has said on a post on X that meeting with his national security team has ended. We have not confirmed that yet here at Bloomberg.
Absolutely. But of course, as soon as we do and any details out of it, we'll bring it to you as soon as possible. Of course, the market really is moving right now on these geopolitical events. We saw that spike in oil, WTI crude, just under $75 a barrel. And of course, the leg down that we saw in stocks earlier this morning, largely because of concerns about what comes next.
Yep. Taking a look at the S&P, still down by about 0.7 of 1% as we get 15 minutes to go to the closing bell. The only sector in the green is going to be energy. Everything else in the red. Healthcare, consumer discretionary, materials, industrials, utilities, even utilities, where you would think that safe haven play, all in the red as well. That money, that safe haven money going into the dollar, as well as the bond market and gold and oil, as Romain was pointing out. Ellen Lee, portfolio manager at Causeway Capital Management, joins us next into the close. This is Bloomberg.
I think you're going to end up with a regime change out of this. And the question is, who's going to take charge and how is it going to work? We sure didn't do a very good job in Iraq in 2003.
Yeah.
We went into Libya, didn't do a good job there. So I hope the administration is going to follow the pattern that we used in Kosovo in 1999.
U.S. General Wesley Clark, retired U.S. General Wesley Clark, kicking us off to the close just about 50 minutes ago. And the kickoff to the close, of course, has a big focus right now on geopolitics as we await the next leg of the conflict between Israel and Iran.
And taking a look at the markets, S&P is down 0.7 of 1%. Tech is down similarly, not necessarily underperforming. S&P Energy Index is obviously the best performing sector in the S&P, and you can see that VIX staying elevated around 21. Well, here's my question, though. Why aren't we down more? So is this sort of a lack of position? Is this reflective of positioning, of mechanical non-buying, but also non-selling? Or is this something else fundamental that we're kind of looking through the geopolitical risk and looking at more fundamental aspects of the market?
I think people are looking at the fundamentals. The question is, sometimes those fundamentals get affected by the geopolitical. That effect is not there just yet. But again, a lot depends what the U.S. does next and just how far this skirmish goes. Because, again, it hasn't necessarily affected oil prices just yet. They have risen in futures markets, but on the spot rate, most things are still relatively in check.
Yep. And then obviously, though, if you take a look at inflation expectations, they're all relatively well grounded. You look at the 10-year break even, et cetera. That's all well grounded as well, but definitely sets the stage for the Fed tomorrow having to address these risks as well as trade risks, for example. Yeah,
the Fed went behind closed doors today. We get that press conference from Jay Powell tomorrow. He will be asked a lot about the geopolitical issues. He's also going to be asked a lot about the economic data, the latest batch of economic data, at least here in the U.S., showing some degree of softness in our economy. Ellen Lee joins us right now, portfolio manager at Causeway Capital Management, to count us down to the closing bells with just 8 minutes to go. And I am curious, Ellen, I know you are the type of person that is much more focused on the fundamentals. Right now, coming out of an earnings season, right now coming off of a slew of economic data points, it seems to suggest that fundamentals here in the U.S. are at least stable, if not necessarily good.
Yeah, I think, at best, I would say it's mixed. Because if you look at inflation data, that's rather stable. Job numbers are okay. But today, some of the macro data indicates that there is some softness. But I think the real expectation on how the tariffs will impact, price increases in the U.S. in the second half is a question mark. And if oil prices do really spike, it will actually pressure inflation. So far things look okay, but a lot of uncertainty out there.
I am curious as to how you sort of allocate around that uncertainty, if at all.
So, obviously macro environment is something that we do consider, but at Causeway, we're looking at companies and investments and considering them on a bottom-up basis. So we like stocks that have price dislocation, meaning they are pricing in a much more conservative and a negative scenario than what would be more realistic. And hence, we're trying to find those opportunities. And also for companies like Reckitt Benckiser, which is a UK-listed a household personal care company, there is a lot of self-help happening, as well as change in capital allocation that will actually, make it outperform regardless of the macro environment.
At the Bank of America Fund Manager Survey, about 54% of respondents said that international stocks are going to be the winner over the next 12 months. And you were just mentioning a UK company. Do you agree with that sentiment, or are you sort of region agnostic?
We are region agnostic, but I have to say there seems to be better tailwinds there. Just, taking into account the consumer environment, there is definitely more inflationary or potential inflationary pressure in the United States. Rates are still higher than in Europe. The tariff impact will definitely come through. We're not sure what the magnitude will be. And if oil prices spike up, remember, U.S. consumers are most levered in the sense that there's very little tax impact. So from a percentage increase, U.S. consumers will feel it more.
Ellen, do you take a look then on sector-wise, or do you really go company by company, or are there sectors that have that biggest price dislocation, as you mentioned?
Well, we go company by company, and we are global sector specialists. But, each global footprint of each company is different. So even if they're in the same sector, for example, in cosmetics, or let's say, beer, you could be, exposed to U.S. or you may not be exposed. So, for example, companies like Heineken, which is a global beer company, they have very little exposure to U.S. So investors may see that as a good thing, in the current environment.
Ellen, this gets to this idea, though, too. It's the idea of how you map out for the long term when we are seeing significant structural changes. I mean, let's be clear. The changes in trade policy, even prior to the current geopolitical flare-ups in the Middle East, there was clearly a huge change in U.S. foreign policy and our relationship with the world. That has to have an effect, even on a bottom-up strategy of what you look at. And it gets to the point that if you aren't already allocated in that direction, when is the time to do that? Do you sort of wait for the whites of the eyes of the effects of all of this, or do you start making those moves now?
I think, we're looking at each opportunity on a separate basis. But Romaine, I agree with you right now, because there is a change in the way the U.S. government is approaching its diplomatic relationship. There is definitely more uncertainty in the United States than before on a relative basis. And for example, in Europe, what is been confirmed is that with the defense spending that's necessary in Europe, that is going to act as a fiscal stimulus. And on top of that, if you look at the fiscal deficit situation on a relative basis, things are better in Europe than the U.S. So, if I'm taking a mosaic approach, there seems to be better opportunities there on a top-down basis than in the U.S. And also to layer in, look at the valuations right now in the United States. There's still a huge premium.
All right, Ellen Lee, Portfolio Manager at Causeway Capital Management, counting us down to the closing bells. We're just about 3 minutes away here with more than 400 at the S&P 500 stocks in the red, dragged down largely by a lot of those solar companies, but you're also seeing a lot of the travel stocks, any stocks that could potentially be affected by additional flare-ups in the Middle East down. And of course, the ones that are higher are the ones that potentially benefit, like a Lockheed Martin, like a Chevron, et cetera.
Yep, even though, as I mentioned earlier, oil prices with volatility, no good for oil companies. JPMorgan Market Intelligence, though, did say that they were already cautious before this, that the market looked ripe for some kind of pullback anyway, irrespective of any headlines from Iran or Israel. So maybe this is that scenario playing out, irrespective of those headlines.
And we should point out, too, Bloomberg has confirmed that meeting that President Trump had with his national security advisors did end. It lasted about an hour, at least for right now. There is no immediate statement out of the White House. Of course, we will continue monitoring that and bring you those headlines as soon as we get them. As we walk you through all of today's market action and push ahead to what could happen tomorrow, we do all that in our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Alex Steele, taking you through to that closing bell. It's a global simulcast with Scarlett Fu here in the TV studio, Carol Masser and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. Carol, we came into today with a close eye on a lot of economic data, but all eyes really shifted to the situation in the Middle East, with the President of the United States just wrapping up a meeting in Washington with his national security advisors.
That's right. And the trade remained telling us so much. If you look at the major industry groups in the S&P 500, the only one outperforming is energy names. They're up about 1.5%. And that we've seen riding the back of another spike in WTI crude. So once again, that really is because we're so focused on what's going on in the Middle East.
Yeah, we just had a great conversation with Bloomberg Intelligence senior defense analyst Wayne Sanders. He's a former colonel in the U.S. Army. He pointed our attention to the USS Nimitz carrier strike group that's making its way there, and also gave us some ideas of what to watch for when it came to escalation. The big question that I think a lot of people have is, what does U.S. involvement look like in a war between Israel and Iran?
Right. It's an unanswerable question right now. So in the meantime, you just see the indexes lose a lot of momentum. You also see bonds come in as a safe haven play once again. Yields are actually down for the first time in 3 days.
Right, and you have the move into the dollar as well, which really dovetails with Bank of America fund manager survey saying that that the dollar is most underowned in 20 years, and yet we're seeing a bid into that asset class today as a safe haven. A bid continues.
Interesting to see the dollar get bid. Of course, also seeing some of those other safe haven FX assets get bid up as well, including the Swiss franc here on this Tuesday afternoon as we get the closing bells right across the screen for all of the major indices. The Dow Jones Industrial Average lower by 300 points, or about 0.7%. The S&P 500 closing below that 6,000 level, 5,982 and change, down 50 points, or 0.8%. The Nasdaq Composite down about 0.9%. A similar move for the Nasdaq 100, and the Russell 2000 lower by 22 points, or 1% even.
All right, that's a look at the overall trade. Back to the S&P 500 I go, and very clear a sign of risk-off trade. The S&P 500, 414 names to the downside, Scarlett, 88 to the upside.
All right, and the IMAP is pretty straightforward as well. 11 groups in the S&P 500. The only group higher is energy, up more than 1%, and that's actually mirrored in what we see in the Russell 2000 as well. All the industry groups lower except for energy.
All right, guys, let's get to some of the individual movers. Let's start with the gainers. Jabil Circuit, that is the number one gainer in the S&P 500. Shares jumping to a record in today's session after the manufacturing services company reported third quarter results that beat expectations. The company also raising its full year forecast. That stock up just shy of 13% at its highs today, finishing the day with a gain of 8.9% on a tear, I should point out, this year overall. It's up about 40% here in 2025. Another outperformer, Fluence Energy, ticker is FLNC. It's about a $1 billion market cap, energy storage products and services and digital applications for renewables and storage company. That's a mouthful. Stock at its high, up about 19%, settling in, though, at the close with a gain of about 13%. The Senate Finance Committee coming out, releasing its version of a budget reconciliation bill that JPMorgan analysts believe is positive for energy storage firms, not for another group of the energy world. I think Tim might touch on that in just a moment. But this stock, I should point out, even with that 13% gain today, is down more than 60% year to date, with about 40% of the float shorted. So some negative sentiment out there, maybe some short covering in today's session. One more name for you, certainly an outperformer, Verve Therapeutics, up almost 82% here at the close. Eli Lilly, of course, agreeing to buy this gene editing startup for about $1.3 billion. They're going to pay as much as about $13.50 a share, the company said today. That was a more than 115% premium to the closing price of Verve yesterday. And I got to say, crazy thing is, the move not to its highest level ever for shares of Verve. It was once a $73 a share stock back in 2021. Wow. Today closing under $12 a share. So I just thought a little perspective there.
Okay, you got the gainers, Carol. I got the decliners. I want to start with shares of T-Mobile falling 4% today. The company shares fell after we learned that SoftBank sold around $4.8 billion of stock. The move helps fund the Japanese company's plans for AI. They sold 21.5 million T-Mobile shares for $224 each. It priced at the bottom of a $224 to $228 range. So certainly some selling pressure on T-Mobile today. Also, solar stocks under pressure today. This is the Invesco Solar ETF, ticker TAN, down 9%. But that kind of masks some of the big moves that the companies within this ETF made. I mean, we're talking about companies such as Sunrun down 40% in a single day. SolarEdge Technologies down 33% today. Enphase Energy down 24%. First Solar down 18%. These U.S. solar companies fell after Senate Republicans released a bill that would end clean energy tax credits earlier than expected. It dashed hopes that major cuts passed by the House wouldn't stick. I did look up on the screen and saw you were speaking to an analyst about this exact thing a little earlier in the program.
Yeah, so he was saying that...
Optimistic, pessimistic, what did he say?
I mean, he said it was worse. I mean, the House bill was worse than the Senate bill.
Okay.
And that there are other things that could continue to boost residential solar, but that market will be smaller and that growth will be smaller. Now, utilities in solar is very different. They still get the tax credits. They sign those purchase power agreements. It's that residential solar, and that's why Enphase is getting hit so hard. That's the problem.
Yeah, just a brutal day for some of these stocks. Finally, JetBlue having a terrible day as well. Shares fell close to 8%. The company said it plans to hasten cost cuts by eliminating some flights. It plans to end service to a number of cities and restructure its leadership ranks as economic uncertainty feeds weaker than expected demand for travel. I have a lot of questions about where this company is going to be going. We're going to speak to Mary Schlangenstein in just a few minutes on our program about the outlook for JetBlue.
Yeah, I think they're also probably a little concerned about that as well. So where do you go in an environment like this? You go to the bond market, particularly the long end. You're seeing yields come in by about 5-6 basis points. Even the 2-year is down by about 2 basis points. There was also a tweet from Nick Timros of the Wall Street Journal, of course, that sort of avenue being the Fed whisperer in essence, saying that the Fed board announces an open meeting to discuss a proposed revision to the supplementary leverage ratio standards at 2 p.m. next Wednesday. So if the SLR, is rolled back in any form, that could mean potential more buying and holding from banks because they don't have to count that against their leverage and their pot of cash, basically. So that could be good for the Treasury market.
Absolutely. And of course, just a reminder that Fed meeting, that normal Fed FOMC policy meeting kicked off today. Of course, they will make their Fed decision tomorrow, full coverage of that. But more importantly, of course, the press conference obviously going to be peppered with a lot of questions about the potential inflationary impact of this rise in oil and the conflict in the Middle East. The latest headlines that we know right now, at least out of the White House, is that meeting between Donald Trump and his national security advisors has wrapped up. We're still awaiting for some sort of communication as to what was discussed, guys, and more importantly, as to what might happen next.
And the reporting ahead of the meeting was that President Trump was seriously considering joining the war. This comes from Axios, among other reports. And of course, in his social media posts, as well as his comments to reporters as well, you definitely got a sense that there was more action on his mind in terms of entering, even though as a candidate, he campaigned heavily on not involving the U.S. in overseas conflicts.
Yeah, and keep in mind, in talking to various members of our team, including Tony Capaccio and Wayne Sanders, I mean, this idea that there is still a big presence already of the United States in the Middle East. I think he said something like 40,000 in total. And right now, what we've seen in terms of what they called the soft power that President Trump has already sent over to the region. He talked about the USS Nimitz aircraft carrier strike group, and you're talking about an aircraft carrier. You're talking about a submarine. You're talking about quite a bit of firepower already. So if you're wondering what, is the U.S. already involved, I think it's safe to say to some extent, yeah, it really already is.
Also, add on 30 aerial refueling tankers that have made their way toward that area of the world. Alex, I think a big question a lot of people have is about what happens to the U.S.'s bunker-busting bombs. This is allegedly and it's very secretive. We talked to Tony Capaccio about it. Allegedly, the only bomb that could bust a certain enrichment facility in Iran, but only the U.S. has it, and only the U.S. has the capability to deliver it with the B-2 Spirit. And that would obviously mark a huge escalation of the conflict and U.S. involvement, considering that the U.S. is the only country in the world that has those resources.
And by deliver it, you mean actually drop it.
Yes,
so it's not like it can pass it off to Israel and say, here you go, have some good luck there. And we were talking to retired General Wesley Clark, and he was saying, look, you got to really focus on the end game, not just the ways and the means, and unclear as to whether or not all those three scenarios were being laid out in the Situation Room.
And that really is, I think, what a lot of people want to hear about. It's not just necessarily the next strike, but sort of what regime change would look like if that is indeed the end goal, and more importantly, who's going to oversee that?
In the meantime, we should remember that we've got a lot of colleagues that are out there in the region. And I know, Alex, we heard some of your conversation on Bloomberg Intelligence earlier with Ethan Bronner, who was on air with you guys as there were attacks happening around him in Tel Aviv. So we're thinking about everybody who is in the region more broadly, and certainly our colleagues who are there in Israel as well. All right, guys, that is a wrap. Our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. I know Alex is heading out. Scarlett and Romain, of course, continuing on the closing bell. And Tim and I continuing on Bloomberg Business Week Daily. Folks, we'll see you again, same time, same place tomorrow.
Our coverage continues here on Bloomberg Television as we continue to monitor developments in the Middle East, and we continue to discuss how that affects the bottom line for corporate America and for investors. That's coming up next here on The Close. This is Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close on this Tuesday. I'm Scarlett Fu.
And I'm Romaine Bostic. We came in today with a big focus on economic data, but it quickly shifted to the geopolitical situation in the Middle East. We're just learning right now that the President of the United States has wrapped up an hour-long meeting with his national security advisors, ostensibly about what direct involvement the U.S. may take in the conflict between Iran and Israel. You see the effect on financial markets with the S&P 500 closing back below that 6,000 level, down about 0.8%, a spike in the VIX, a big spike in oil, WTI back at that $75 level, and you're seeing a big boost into haven assets, including the dollar and into gold.
And I see also you have the ETF that tracks solar companies. That's down about 9% on the day. Some of the names within that ETF, Enphase Energy and First Solar, they're the leading decliners here in the S&P 500 at the end of the trading day. And this is as Senate Republicans released a bill that would end tax credits for wind and solar earlier than for other sources. So KeyBank downgraded this sector. On the flip side, you have Reddit up for a fourth straight day, now at a 3.5-month high, gaining more than 6%. The company announcing it is launching new AI-powered market tools that can mine its huge base of user-generated content to generate new insight for advertisers. But our top story this hour remains: where and how does America fit into Israel's war against Iran? President Trump began the day by playing down prospects of a ceasefire, saying that he's not in the mood to negotiate and prefers a, quote, real end to the conflict. His remarks, both in social media and to reporters, suggest U.S. involvement, even though as a candidate, he was firmly opposed to U.S. engagement in foreign wars. With Israel pressing the White House to step in militarily to take out Iran's nuclear program, the question is whether Trump will change his stance. Romaine?
All right, for more on the conflict, let's bring in Jonathan Panikoff. He's a former intelligence officer with the Office of the Director of National Intelligence here in the United States and the National Intelligence Council. And Jonathan, I am curious about what we knew heading into this month, I should say, with what Iran's nuclear capabilities are. I mean, we know that there are basically 9 nations that have nuclear weapon capabilities. How far along did we think Iran was in that process?
Thanks so much for having me. Look, I think that's been part of the dispute here and part of the question. The U.S. assessment had long been that Iran had made significant progress when it came to enrichment for its nuclear weapons program, but that it hadn't actually weaponized. In other words, it hadn't done the testing necessary to make sure that a weapon could be used, that you could mate the enriched uranium with a nuclear warhead, so to speak. The Israelis clearly thought differently. They've said that recent intelligence indicated that the Iranians had tested successfully. And so it seems that the Israelis used that, frankly, as the biggest motivation to strike, that once Iran had tested successfully their weapons design, Israel thought that they were too close to getting a nuclear weapon, that Israel couldn't wait any longer.
Is there any sense, as if we are going to a more of a full-scale conflict here that does involve either a toppling of the regime or some significant hobbling of it, are there measures in place as a matter of protocol to ensure that whatever nuclear materials are there are protected and safeguarded by a responsible actor?
Well, one of the reasons the IAEA has long said that nobody should be targeting nuclear facilities is because they're worried significantly about the damage both in the environment, but also the possibility that in such an event, you'd have rogue actors that would somehow take advantage. I don't know whether or not they've actually come up with a plan to safeguard all of Iran's nuclear stockpiles of enriched uranium. The challenge with that is Iran is a massive country. It's about 2.5 times the size of Texas. This isn't, say, Syria even or Iraq back in the day. I think it's something that the world is going to have to think through, but it's also a question if regime change is really where we're heading. I think there's going to be a real question for President Trump that if he were to decide to take action and to strike Fordo, the one remaining nuclear site that the Israelis are said to really have a struggle to get at, well, then does that end the war? In other words, is regime change part of this in the end? Or is it, look, the nuclear question is no longer a challenge for Israel, it's no longer an existential threat, Iran's nuclear program is ended, and so the end result is Trump says that in turn should end the war. I think that's really the open question, and maybe we'll find out more coming out of the NSC meeting that just happened.
Well, speaking of that NSC meeting that just happened, it took about an hour, maybe an hour, 20 minutes. Based on the folks in the room, what kind of advice, what kind of options do you think were laid out for the president?
Well, certainly from the military perspective, the chairman of the Joint Chiefs, they're going to lay out every option, everything from not getting involved at all to here's what a strike would take that would decapitate the regime and everything in between, a singular strike just on Fordo. And also, of course, what is the regional blowback? In other words, if the U.S. strikes Fordo, will and the Iranians respond, or Iranian proxies, say Iraqi militias, respond against U.S. bases in Iraq, U.S. personnel and interests in Iraq? What should the response be? All of that will be on the table, both offensive and defensive. And then the cabinet members will go around the table and very frankly state their opinions about what the United States should do, whether it should take action or not.
Does the G7 have any role to play here, Jonathan? I know that the president left the G7 meeting a day early. He originally was not going to sign that joint statement, but in the end he did. And there's a lot of mixed messages coming from the remaining members there. Is there a role for them to play here? Because this is a global conflict if the U.S. does get involved.
Look, it's certainly a global conflict. I think from the G7 perspective, the easy one almost is the economics. And obviously, there's a real fear, right? You're talking about a fifth of global oil goes through the Strait of Hormuz, a quarter of LNG. And if the Iranians retaliated, say, by closing the strait, it's going to have a huge impact on everybody from the energy perspectives. At the same time, when it comes to this decision, I think there's very little room that the G7 is going to be able to maneuver within to have a sizable impact on the president. If you look at the E3, the British, the French, the Germans, they were playing a quite meaningful role in engaging Iran. They have historically engaged Iran meaningfully, and they were doing so before the Trump administration came in to talk about what an agreement might come before the possibility of snapback sanctions at the UN, which is still looming in October. It made no difference to President Trump in the end. In the end, he said, look, I'm going to do this my way. Steve Witkoff started to negotiate. The Israelis then struck. I think this is really a decision Trump is going to make himself about whether the U.S. should get involved or not.
All right. Well, thank you very much for your perspective. Jonathan Panikoff, former intelligence officer with the Office of the Director of National Intelligence and National Intelligence Council, joining us with the latest on what's going on between Iran and Israel and how the U.S. responds. Coming up, investors clearly on edge as these tensions build in the Middle East. We're going to discuss sentiment and flows with John Maier of JPMorgan Asset Management next. This is The Close on Bloomberg. The S&P 500 deepening its losses in the afternoon, finishing with a decline, giving a glimpse into the mood on Wall Street as tensions build in the Middle East. John Maier is chief ETF strategist at JPMorgan Asset Management, and he says ETFs provide a window into investor sentiment. Joining us now to discuss the mood across the markets is John Maier himself. John, good to speak with you. We get the official flow data the following day, but what's your sense of what is that going to show on a day like today?
You know, there's a lot of geopolitics going on right now. There's concerns, obviously, about tariffs as well. What we're finding generally is that investors are diversifying. They're diversifying into key different areas. One of the key areas is the ultra short category. And I think we're going to see increased exposure to that category after a day like today. A category like that provides a lot of protection. And you're getting still a strong yield of 4.5% in that range. But you're getting a very very low duration, so very little risk in the market overall.
So this positioning, is it a place to hide out for now, or is it someplace that they want to be for months at a time?
You know, with yields as high as they are, and for example, we have a product called JPST, which has a yield of around 4.5%. It gives you a yield of about 95% of the Bloomberg Ag, but with only 12% of the duration. So it's a good diversifier in a portfolio. So I wouldn't say it's hiding out. Mm-hmm. It's a place to provide that short fixed income exposure, actually.
I am curious. So when I was looking at the flows, and it's backwards looking, but coming out of May, and the idea that with all the volatility we saw in the market, it was still a lot of high beta strategies. It was still a lot of defensiveness. And we saw some credibility to this idea of people rotating into non-U.S. assets with, I guess, some of the inflows we saw into emerging market ETFs. Why?
Well, there certainly has been legs into diversifying out of the U.S.
Yeah.
But you have to kind of put that into context. We've seen about this year $11 billion go into European equities. You contrast that with last year, there was outflows of $5 billion. Mm-hmm. Now, relative to the overall ETF marketplace, it's relatively small, but you are seeing positioning. So you have the ETF marketplace is $11 trillion in assets in the U.S. So $11 billion moving into Europe is, it's significant and gives a window into insight where investors are thinking, but it's still a small percentage of the overall flow.
Do you anticipate that percentage might actually increase meaningfully?
Yeah, with the dollar weakening, I think investors are looking at, how should I diversify my portfolio? Ultra short is one area. But something really interesting I'm finding lately is that there has been a movement back into growth. The AI story certainly has a lot of legs. With all the geopolitics going on, the AI story really kind of transcends that to a certain degree. And you are seeing that move back into the Mag 7, as well as that's why I think an active strategy where you're actually looking at each individual company and how that company is impacted by tariffs or not impacted or how they can absorb certain costs is really meaningful, the active story.
Yeah, I mean, the Mag 7 being, the primary examples of growth, but at the same time, they're so big that they've become defensive plays as well. I want to ask about Bitcoin and gold and how that fits in. We've seen treasuries behave strangely as havens, certainly at the long end. I know at the short end, you're talking about ultra short duration income being a good place to be. But what's the flow like when it comes to gold, when it comes to Bitcoin, and how much are people carving out of, their haven exposure to those two asset classes?
Yeah, you certainly can access Bitcoin as well as gold through the ETF structure. And since it's an easy structure to access in brokerage accounts, you are seeing investors move into gold. Gold is a defensive play, particularly as the dollar weakens. You're seeing more assets go into gold. And younger investors are certainly investing in Bitcoin. It's probably about 2 or 3% of the overall ETF marketplace.
As opposed to gold, or in addition to gold?
In addition to gold.
I am curious about just the active side of this, too. I mean, we've heard a lot of people talking about how, particularly, not even just this year, but even into last year, the idea of active management in the ETF space being much more critical than maybe what it was in the past. When you look at active management, whether it's in the commodity space, something like gold, whether it's in obviously what's going on in the fixed income market right now, does that uncertainty around where rates might go, where the dollar might go, et cetera, does that aid in your process?
Well, I think the numbers speak for themselves. So, I would answer that simply yes. But so I mentioned that active ETF assets are about $1 trillion of the $11 trillion. But the flows this year have been 39% of all of the flows have been to actively managed ETFs. A manager can actually, whether it be fixed income or equity, identify those securities that are mispriced. There's opportunities in the securities, or minimize exposure to, say, some of the top holdings in the larger indexes. So the active manager has the ability to utilize research, utilize technology tools, and AI is really a great tool in terms of finding opportunities as well.
All right, John, great stuff. I assume you're using AI a lot, right?
We are.
All right, John, great stuff. John Maier there. He's the chief ETF strategist over at JPMorgan Asset Management. A look at market sentiment, a look at ETF flows as political risk, Scarlett, continues to mount. Of course, still waiting to hear from the President of the United States on what the U.S. involvement might be.
And we also have a big week with the FOMC meeting today, and of course, coming out with a decision. No change in interest rates, but there might be an update to the economic forecast.
And as investors try to navigate all of this risk, so too to corporate executives. A conversation up ahead with Teneo's Managing Director of Political Risk, Emily Stromquist. That's coming up next here on The Close. Stick with us. This is Bloomberg. We turn our eyes back to the situation in the Middle East and back to Washington, where President Trump just wrapped up a meeting with his national security team in the Situation Room. Josh Wingrove is our White House reporter. He joins us right now to talk a little bit more about what we know. And there's been a lot of discussion, Josh, about whether the U.S. would become directly involved in this conflict. And at least based on some of the Bloomberg reporting we have out there, a key part of that are these bunker-busting bombs that could potentially penetrate some of those Iran nuclear sites, bunker-busting bombs that only one country has control over, the United States.
Yeah, that's where a lot of the focus is on whether the U.S. will get involved or not. And I should note that the president has been really almost purposefully opaque on this. We flew back with him overnight from the G7 in Canada, and we asked him every which way, basically, on U.S. involvement. And he really didn't want to talk about it. He didn't want to talk about, for instance, whether there is a plan if Iran hits U.S. assets or military vessels or sites or what have you. Didn't want to talk about that. He said he thought that Iran knew better than to hit American targets. So far, of course, that is proving to be true. And then we had this meeting this afternoon in the Situation Room, which has concluded, don't know yet what came out of it, about what the U.S. next steps may or may not be. But I really want to emphasize they are really keeping sort of vague in whether they're considering action in terms of direct military action in Iran, or whether they're more in a monitoring phase or a bracing phase to sort of put implicit pressure, perhaps by moving assets into the region to force Iran to surrender, which is a word the president has been using. The real question here is whether there, of course, are off-ramps for some sort of solution. I asked the president overnight whether he was still interested in talks, and he kind of said I wasn't too interested, but he also said he might send Vice President Vance and Steve Witkoff to negotiate. So a lot of moving parts here on this one. It's really tough to parse, but I think that's actually the strategy right now, is they are trying to be deliberate as they want to force Iran to surrender, I guess is the president's phrase. He does not like the word ceasefire because he thinks it's too temporary.
Okay. You mentioned the off-ramps and how Steve Witkoff and J.D. Vance, the vice president, might be sent as envoys. Can you talk a little bit more about the path for diplomacy here? The president has made clear he doesn't want to involve the U.S. into military conflicts overseas, but that would leave diplomacy, negotiation as the only other path.
Yeah, it's an interesting sort of split in the Republican Party. The president is grappling with sort of two factions within his party, right? Because there's certainly a faction that wants him to fight Iran or at least support Israel, however that looks. And then there is that non-interventionist faction. And we've seen the president pushing back against the latter, including Tucker Carlson, saying, America first can include in his mind interventions. And so that has sort of kept alive this question about whether or not the U.S. will intervene. And I skipped over earlier the question about the particular weapon that they are using. That really is sort of one of the main open questions here, is if they want to hit this Fargo site, one of the main Iranian nuclear sites. It's believed by a lot of analysts that they would almost certainly need to use the MOP or MOP bombs, which are dropped from B-2s typically. In other words, it's up to the Americans. So I think, again, Trump has not wanted to really engage in this, and at the same time has said that that's the reason why he bailed on the last day of the G7 and came back last night. So all eyes are on it right now, but it's certainly trying to remember last time where sort of one issue has consumed the president's focus and attention for so many days in a row. It's not that common. Usually he's juggling a few balls. Right now they're looking at this one.
All right, well said. Bloomberg's Josh Wingrove, one of our White House correspondents. Really appreciate your joining us. Yes. And of course, Josh mentions the G7. We're still watching the G7 summit, which is underway in Canada. It is day 2 of the gathering of leaders. They did agree on AI and critical minerals, issuing some statements just moments ago. Bloomberg's David Gura is on the ground for us in Alberta, Canada. And David, I assume that these statements that the G7 nations, the remaining G7 nations have issued, have come without any U.S. involvement.
Yeah, so they're trickling in now. There are 6 of them in total. And so you mentioned the kind of major ones when it comes to the economy, and they've been the subject of so much focus and discussion while we've been here. There have been some other ones as well, focused on wildfires, for instance, and transnational repression. So this is in lieu of there being a joint communique, the likes of which we would have seen at previous G7 meetings and G20 meetings, when all of the parties get together and sign on to all of the various policies and policy proposals. That's just simply not happening this time around. So what the Prime Minister, Mark Carney, has been doing is shopping these around to all the members who are here of the G7 and trying to get their signatures on them. Of course, President Trump left yesterday after dinner. In his place is the Treasury Secretary Scott Bessent, who's been playing the role of the U.S. leader here at all of the formal functions here at the G7 on the second day. So he's been sitting around the table when it's just the G7. Currently, we're seeing the G7 with all of their invited guests as well, including Narendra Modi and Volodymyr Zelensky. So he's there at the table for those conversations. Again, we're going to read through these statements as we get them, but we've seen them in draft form. Another big issue that's been discussed here is the prospect of there being additional sanctions on Russia going forward here. This is something that a lot of European leaders have pushed for, and certainly the Ukrainian president has pushed for over the course of his time here at the summit. And we heard from Prime Minister Mark Carney this morning that Canada plans to impose sanctions on 40 other Russians. All of this amounts to pressure on the United States to do more. You know that Senators Lindsey Graham and Richard Blumenthal in the United States say that they have more than a simple majority of senators who are willing to do this. They, too, are trying to apply pressure on President Trump to do more to get Russia back to the negotiating table. That is the overarching goal of all of this on this day at the G7, when the focus is on that conflict. Yes, there is still talk about what's going on in the Middle East. There's so much attention being paid to what's happening there and in Washington, but the focus here has been on Ukraine and on trying to do whatever they can to get Russia back to the negotiating table, guys.
David Gura out there in Alberta, Canada, and of course his last comments really underscore the uncertainty and unpredictability sweeping across global markets right now as world leaders, investors, and of course corporate leaders have to try to find ways to navigate the environment. Emily Stromquist helps those folks do just that. She's managing director of political risk at Teneo and has a lifetime of experience, particularly when it comes to foreign policy and the Middle East. And Emily, I do want to start there with developments, of course, that are still developments, with developments that are still uncertain, and with responses that are still unpredictable. What is the advice that you give corporate leaders?
Yeah, for all CEOs, not just those that we talk to, but across the universe of corporations, we're seeing a lot of concern in this environment about geopolitical conflict. Attention is volleying between trade negotiations, Russia, Ukraine, Iran, but there's really a sense right now that this is a pivotal moment for Iran. I think all eyes in the next few days are really focused on what's going to happen, how that plays out. Any sort of regional and global repercussions that could be expected.
I am curious that when you have military conflicts like this, what typically or historically can you draw upon to sort of gauge what those ripple effects will be, particularly when it comes to the global economy and corporate bottom lines? Is there a connection?
Yeah, so the sort of most effective tool is always to do your scenario planning. There's nothing we can recommend to companies more than thinking through possible outcomes, preparing, coming up with contingencies. And I think that's really in this situation in particular, where there's so many possible outcomes, so many ways this can play out. Uncertainty linked both to the Trump administration's approach and to Netanyahu as a leader, and in terms of his approach to the Iran conflict right now. It leaves so many questions that really thinking through the scenarios and sort of coming up with a range of possible responses is the best that every corporation can be doing right now as we wait to see how this plays out.
Is it helpful for companies to look at past geopolitical incidents as kind of a playbook for how to prepare, how to brace themselves for this new uncertainty? Or is that not a good template because we have a leader who's so unpredictable this time around?
I think that's exactly it. This is a regime that's incredibly unpredictable. We've discussed that at the moment, this is really about eliminating the nuclear capabilities of Iran. That may or may not lead to regime change. Regime change may be targeted as part of this. It's kind of irrelevant whether there's regime change or not. And I think that in particular makes this a difficult calculation, particularly in the case of Iran. There's the question of Khamenei and his leadership right now, but there's the ideological underpinnings that are tied to Khamenei. And that is still sort of the driving force behind political thinking in Iran. The government is largely intact, despite some of significant shifts and targeting of IRGC leaders. So it's a lot to take in. There's a lot of different ways this can play out, and I think kind of both the unstable regime coupled with uncertainty about its actual nuclear capacity at the moment really makes for a unique situation.
Right. I like how you put it that regime change ultimately is irrelevant when it comes to U.S. companies and how they move forward. However, volatile oil prices and the Strait of Hormuz shipping is very relevant. How do they move forward with something like that? Are they hedging? Are they making decisions that kind of are put in place for 2 months or 3 months at a time?
Yeah, so we do see oil markets have been very interesting in recent years because they've really learned to just absorb geopolitical risk. A large part of that really has to do with the growth that we've seen outside of OPEC, now coupled with the fact that OPEC Plus is starting to unwind the cuts that they've had in place for years. This has created significant buffer in the market. That's reduced some of the fears about potential targeting of energy infrastructure in the Middle East. But in terms of, I think Hormuz is especially one of those wild cards. You'll see a lot of energy analysts out there who would say this isn't even something we should be discussing. It's outrageous. It's completely unfeasible for Iran to do that. I think given what we've discussed here today, you can't really take anything off the table with Iran. There's no unfeasible. And so this is where, for oil markets, you really have to kind of consider all possibilities about what can be targeted and how to prepare for that and the potential price shocks. But we do seem to be in a comfortable range right now in the mid to low 70s. Per barrel.
Emily, really appreciate your joining us. Emily Stromquist of Teneo. There is no unfeasible, and you can't really take anything off the table. And it is because of that uncertainty, Romaine, that drove stocks lower through the afternoon. We closed down on the S&P 500 by 0.8%, and very much giving back yesterday's gain.
Yeah, it was kind of interesting. You had that big sell-off on Friday, and then, of course, that sort of unwound yesterday, and now it's back. And it gets to this idea that the market really is trying to figure out just how severe this conflict can potentially get, and are there going to be direct economic consequences? Because there's maybe not be. Maybe it's confined to oil and natural gas and commodities. Maybe it ripples out into something broader than that. But I think you have a market right now, at least based on what you see on the board, that's really trying to grapple with that.
Absolutely. What I did find interesting is that yields are lower as Treasuries end 2 days of price declines. For a while, Treasuries are not trading as havens in quite the way that you normally expect them to. But today they're playing that role.
Okay, and that could actually change tomorrow with the big Fed decision, and more importantly, the Fed press conference. We're going to discuss that with Glenn Hubbard when we come back. This is The Close on Bloomberg.
T-minus 22 hours away from the Fed's rate decision, and while policymakers are expected to hold rates in June and maybe even July, there could be some signs about future cuts. Joining us now to discuss is Glenn Hubbard, former chair of the Council of Economic Advisors. He is currently a professor of economics at Columbia Graduate School of Business. Glenn, always a pleasure to see you.
Thank you. Likewise.
So there's widespread consensus the Fed will do nothing and keep rates unchanged. But do you see enough evidence in the data, particularly of late, including this morning, that opens the door for policymakers to start cutting in the second half of the year?
I think that door is certainly open. The challenge for the Fed is if it preemptively cuts too soon, long yields may go up and undo it. So I think that's the real risk. The data are weakening, though. We saw the retail sales numbers. The job market is weakening. So I wouldn't be surprised to see a Fed cut later in the year. The timing is somewhat uncertain. Obviously, events in geopolitics, other public policy events in the country make it hard for the Fed to plan right now.
What is your confidence that inflation has been solved or that this disinflation theme will persist? Because it surprised a lot of people that inflation hasn't, making this reappearance the way a lot of people anticipated because of the tariffs.
I don't think inflation has been solved, and I think that it will likely stay above the Fed's target level, which complicates things. I don't think we've seen the effects of the tariffs much yet. Businesses first try to absorb in margins before passing on. So I think it's too early to say on inflation, and that's the risk for the Fed. If it cuts too soon, then it looks like it's getting ahead of itself.
I'm curious, though, what would a cut do? I mean, I'm talking like 1/4 point here and there. Does that have a material impact on economic activity?
It won't in and of itself, but it signals a change in direction that the Fed is moving toward lower short rates, which will affect economic activity. But again, on the Fed's watch list is what's happening to that very important 10-year yield. And if market participants are still worried about inflation, that's where its attention should be.
There's been a lot of discussion about how the Fed is also very concerned right now about mortgage rate, about the housing market, I should say, overall, and obviously how mortgage rates feed into that. And I know that technically what they do on the short end of the curve doesn't have necessarily a direct impact, or maybe it does onto a 30-year mortgage rate. But psychologically, that can help to move mortgage rates down, couldn't it?
Yeah, I mean, it helps in two ways. One, if it affects the real economy, that obviously affects housing. The other is to the extent that it does move the 10-year yield, that does figure into mortgage rates.
Gotcha.
President Trump has been on a very public campaign to pressure Jay Powell to lower interest rates. He's talked about it various times in social media postings. He wants a 1 percentage point cut reduction. His latest explanation, his latest spin, is that it's important to bring down the cost of servicing government debt. Is this something Powell's even in a position to comment on or respond to? I mean, it's going to come up in the news conference tomorrow, I'm sure.
Well, I'm sure it will. And I think Chair Powell and his colleagues are trying to do the right thing as the Fed sees it, which is to keep inflation under control. If the Fed does keep inflation under control, that will keep interest rates as under control as they can be. The question for federal debt rates, though, is high levels of deficits in government debt also put upward pressure on real interest rates that the Treasury has to pay.
So I guess the question is it a reason to cut interest rates to reduce government spending on servicing the debt? Is that reason enough?
No, I mean, I think the reason to cut rates would be if you think you have solved the inflation problem and or there's a problem in the real economy that the Fed wants to do. The lower interest rates definitely would help fiscal policy. But the government itself has a lot of role to play there.
I am curious about the bill that's working its way through Congress, this tax bill. And I know that the way it's being pitched by the Republicans is that it would actually provide some boost to economic activity, irrespective of a lot of the concerns about the long-term effects on debt servicing. Is there a sense that with the tax cuts, at least what we know publicly, the tax cuts are preserved, with the new tax cuts in there, that could be enough of a ballast for the economy? Or do we have to worry about the drag from the fact that these aren't being paid for?
Well, I'm going to give you the classic economist answer of yes to both of those. Yes, the tax cuts are beneficial for the economy, particularly the business tax cuts for investment, and certainly not passing a bill would be bad for the economy. That said, there are two issues. One is that the deficit is high as a result of this, and that may put upward pressure on interest rates. The Congressional Budget Office today just issued a report on that. The other is we could get the pro-growth elements of this tax bill with a much lower deficit. It would be a different bill, so Congress could go back and work on that. But yes, we need the tax bill.
I mean, you've had a seat at the table for this process in the past, and I am curious, how much of the focus is on the long term rather than just say, the next year or two until the next election, making sure that we have, basically something in the win column to show to the American people? Or are they really thinking long term about what the ramifications of these policies will be on the economy 5-10 years down the road?
Well, I think the administration is thinking about the long term, and I hope that it will pivot to a more long-term growth-oriented agenda, which isn't just about taxes. It's about deregulation. It's about permitting reform. It's about how we deal with AI. I'd like to see that pivot. But yes, I think they do care about that.
What's the number one thing that you think investors are not paying enough attention to when it comes to the economy that they should be taking a closer look at, should be maybe even slightly worried about?
Well, asset prices seem to me to be still relatively richly valued, given that we've had a sea change in tariff policy, in geopolitical risks, and yet we have the stock market going back up to levels before so-called Liberation Day. I think that is a tail risk for the economy.
I mean, I don't want to put words in your mouth, but do you see evidence of a bubble in asset prices right now?
I wouldn't call it a bubble, but I would say that markets are pricing for perfection as if all the tariffs will go away, that policy will revert to pre-April 2nd levels of everything. Maybe that's true, but I don't see the evidence for it.
So it's a case of investors treating all the uncertainty as kind of noise before they are counting on the president to go back to, basically calling his bluff in many ways.
Well, that's one way to put it. I think that people could reasonably say, well, these tariffs have gone up, they've gone down, maybe they'll go to zero. I don't think that's the plan. The administration has suggested revenue being raised over 10 years, perfectly legitimate thing to claim, but that's saying the tariffs will be here to stay, and I don't think markets have priced that.
All right, Glenn, this was a really illuminating conversation. Appreciate you coming in. Professor Glenn Hubbard, former chair of the Council of Economic Advisors. All right, a lot more coming up in the show. We're going to set you up for what to watch over the next 24 hours of potential market-moving developments. This is Bloomberg.
I think one of the challenges that America has consistently underestimated over the last decade is the rate of change in China's ability to innovate. We need to further strengthen our universities because we do need, as a competitive matter, to be able to out-innovate the Chinese.
And that was Ken Griffin, Citadel founder, speaking with Arshanali Basak for the premiere episode of Bullish, which airs at 6 p.m. Eastern time tonight. And it's a reminder that China is still very much on our minds, even though it hasn't been a story the last couple of days.
Yeah, we kind of forgot all about China, right? I mean, of course, those trade talks were actually an upside catalyst for the markets just a couple of weeks ago. Of course, all eyes right now on the Middle East, and all eyes over the next 24 hours are going to be in a slew of economic data, and that includes some inflation data out of the UK and Europe.
Yeah, at 2 a.m. we get UK CPI, and then at 5 a.m. we get Eurozone CPI. We know the central banks in that part of the world has been able to move on cutting interest rates a lot faster than the Fed.
And that actually leads us, of course, to our own economic data here in the United States. 8:30 a.m. We're going to get weekly jobless claims. They're coming a day early because markets will be closed on Thursday for the Juneteenth holiday.
That's right. We also get housing starts as well. So all of that will play into the big show, which is at 2 p.m. when Jay Powell comes out and makes his announcement on interest rates.
Yeah, we're not expecting any change in interest rates, but of course they are expected to update the economic projections. Yep. There's a lot of talk that could be hawkish, and of course he's got to stand before the media, and he's going to be peppered with a lot of questions about everything that's transpired since the last meeting.
Especially with a lot of people betting that the next Federal Reserve chair will be cutting interest rates, will be a lot more dovish once Jay Powell's term ends.
And think about just how much has changed over the past 6.5 weeks. We talk about the developments on the trade front. Obviously, the skirmishes now going on between Iran and Israel. We'll, of course, have full coverage of that right here on The Close tomorrow. Our Fed special starts at 1:30 p.m. New York time with team surveillance taking the helm. We'll pick up after that, but stick around. A lot going on in Washington. Balance of Power is up next.